taxes, keeping my books straight, running a profit and loss statement, it all gets so confusing. I used to spend more time trying to worry about my taxes and if I'm doing them right than I actually did working on my business. I needed a solution. That is when I found Core Financial. Core is a team of tax professionals that actually care about real relationships with their clients. From the moment I hired Core, I was able to trust that I will be fully taken care of. They run my books, keep me up to date with my finances, and make sure I'm taking full advantage of all the tax breaks I qualify for. Are you struggling to understand your finances? Do you need help making sure you don't make any mistakes? Look no further. Core Financial. Both Nick and I are huge fans of Core Financial, and we know you will be too. Check out howtofilmweddings.com/core to see what they can do for you. Core Financial. Real relationships. No surprises. We are doing something fun. Tax season is almost here.
Is tax season fun? Well, like you said, it's something fun. Is this like taxes? Is that fun? I mean, maybe for Jeremy doing them.
It's fun to talk to Jeremy about it because he's awesome. Hello and welcome to the How to Film Weddings podcast. My name is John Bunn. I'm joined by Nick Miller. Today is a fun day. Nick, it's springtime. How are you doing, my friend? What's new in your world?
Dude, I am doing really, really well. Except if it weren't for Core, I don't know if I would be doing as well. Core Financial Services is handling all of our books, all of our taxes this season. We have paid them. All I am doing is sending them my information, and then they take care of everything for me. So I am doing well because of that. I know there's some of you out there listening to this that might be a little stressed because tax time is coming in just a few short weeks. And so today we did something special. We actually went live in our Facebook group. So if you're listening to this on podcast or watching this on YouTube, this is actually not a live episode, but we did go live in our Facebook group, and we had Jeremy from Core, who is our tax guy, talk all about taxes, answering your questions about taxes and what you should do and how you should move forward. So I don't have anything else to say about it. It's a good episode. It was very knowledgeable. Help you learn some stuff, help you with your taxes. John, do you have anything you want to add?
Nope, I'm good.
All right, so let's jump into the episode.
To those of you that are listening live in the group, we are doing something fun. Tax season is almost here.
Is taxes
kind of
fun?
Well,
like you said,
it's
fun
something
fun. Is this like taxes? Is that fun? I mean, maybe for
it's
Jeremy.
It's fun to talk to Jeremy
fun.
about it because he's awesome. Good little product placement with his cup I see there. But couple things. We're going to do live Q&A talking about taxes, books, all the things running your business. Jeremy is with Core Financial. We'll let him talk about a couple things here in a second. The coolest tax guy that I've ever met. So that I haven't met a lot of tax people, but they're mostly not cool. But Jeremy is.
I've met a couple, and a lot of them are not very cool.
Yeah, so, we thought we would bring Jeremy on to kind of answer your questions. We have a big list from a post we put out yesterday in the Facebook group. But we're also going to turn this into a podcast, so if you missed part of it, you can come back and listen to it later. But tax season is upon us, Nick. It is here.
It is.
And it is daunting and annoying, and I hate paying the government money. But with people like Core and our corner, they've helped us a lot. So, you see what I did there?
Oh,
I said corner. Did you hear it?
I did see what you did there. That was
I feel like you're the accountant right now. Like, what's going on?
It's like Ben Wyatt on Parks and Rec when he goes and works and he just makes all these stupid puns and they think he's hilarious. Yeah.
Get in here! Hear what he said! All right, well, enough goofing around, guys.
Yeah, if you're watching this on live in the group, just let us know that you're there. Say hello. We have a few people watching, but we want to know that we're actually talking to people and not just talking to no one. So say hello in the chat. Before we get started, Jeremy, why don't you just take a second and introduce yourself, say who you are, where you work, because we haven't plugged it enough, and what you do there.
Yeah, my name's Jeremy Doorn. I work for Core. We're in your corner, apparently is our tagline.
Core in your corner.
Your corner. We do books and taxes and payroll and everything financial for small businesses all over the country. We partner with them, learn their business, give them timely financials. But most importantly, what we do is we do tax planning throughout the year so that people aren't getting big tax surprises. It's never fun giving tax surprises or getting tax surprises. So on both ends, it's not fun for me to give you a tax surprise that you're not expecting. So we try to mitigate that by doing tax planning throughout the year so that we can, one, limit your taxes as best we can legally without just completely making everything up. But if we're doing tax planning through the year, then we can actually make changes rather than just having numbers after the fact. We like to sit down and get to know our clients. So we've got great relationships with our clients because we actually care. And so it's just something we've been passionate about for years. I've been working here 10 years, and it's been awesome getting to know all the different businesses and just getting to know the business owners.
Yeah, and I was referred to Jeremy a little over 2 years ago, I think so now, by a friend, another small business owner here in town. And at the time, I was using a different company that I think most of us are in this situation where we have a tax guy or a tax person, but we basically go to them once a year and say, hey, this is what I did last year. My taxes are due. Can you tell me what I owe? Can you tell me, and so they're like, they look at you like you're crazy. And then they say, you did all this wrong. And then you owe a lot of money, and then you get a lot of penalties because you didn't do it right. So that's a lot of us. And so I came across Jeremy and Core and just the attention to detail that you guys had, and were able to really go through and look at my business and go back to the last couple of years and why is that tax person doing it this way? Why? And I was just like, I don't know anything about taxes. I'm trying, And so anyway, had you guys start taking over my books, was a little bit leery, just are they going to, what's going to happen? And within the first year had saved me thousands, if not tens of thousands of dollars. And it had completely shifted my business to kind of know what was going on instead of just kind of that, monster in the closet. What's going to happen at the end of the year? Now we can every couple months, connect with you guys. I mean, you guys are very quick to respond. Within minutes, it's kind of crazy. It's does Jeremy do anything besides work with me? He's literally just responds 2 seconds later. But anyway, just being able to have the team, you guys have so many people over there that know exactly what they're doing for running my payroll and doing my sales tax and doing my books. And so we always are asking you all kinds of questions and you're answering them for us. So we thought it would be great to give to the group and say, hey, let's answer some questions. We're all small business owners. So if you do have questions, just drop them in the comments. We'll get to as many of them live as possible. Nick, did I leave anything out?
No, I don't think you did leave anything out. So similarly, I was in a tax bind. I think a lot of people, right, we do our books ourselves and then we just, turn it over, and the books was something I was awful at. I think the year that I signed up for Core, I had done my books one time the previous year in July. And then I went, something like that. And so they, took all that stuff and handled it for me, so I didn't have to think about it, so I could focus on business stuff. So, and it stinks having to pay the government anything, but knowing months ahead that you might owe them, a few $1,000s is better than on April 14th, whenever you turn in your tax stuff and they say, oh, by the way, tomorrow you owe $8,000. Then you're like, oh, okay. But if you have to owe that, but it months ahead, you can plan for that and be ready for it. So,
Exactly.
I've been super satisfied with Core.
And I tell clients all the time, and it scares people, I hope one day you get to pay $4 million in tax. And they look at me like I'm crazy. But if you're paying $4 million in tax, you're making lots of money.
It was a good year. Yeah.
Yeah.
It's true, and knowing, I owe money this year, but knowing it's happening, I've been able to save back and get things ready and get things prepared and ask questions as we were leading up to the end of the year, like, should I buy a computer? Should I buy a new vehicle? What should I be doing? And you were like, don't do that. Don't be crazy. You taught me, So anyway, Chris once says hello. Olga says hello. Steven's watching from Australia. Tyler Carlson just joined. Sylvia says hello. Hi, everybody.
My wife
Let's get to
joined.
Jennifer Miller's joined. Hi, everybody.
Questions.
Thank you for tuning in. Let's do it.
Oh,
All
you
right,
want me
I'll
to
pull
ask
up
one?
the first one here.
Okay.
No, I can ask one.
Okay. Go for it.
Okay,
Go for
the
it.
first question, Jeremy, comes from Blake. He says, are you supposed to pay taxes and Social Security, or when you pay your taxes, does that include the Social Security?
It depends on how you're paid. So if you're being paid as an employee and you get a W-2 or a paycheck, like a regular paycheck every 2 weeks, the Social Security is taken out of your paycheck, and that's when it's paid. And then the company that you're working for, whether it's you or another company that you're working for, actually matches Social Security and Medicare, and they pay it as they go. And then your tax return is the reconciliation of just your income tax. So it doesn't reconcile Social Security. But if you're a small business owner and you report all of your business income on your Schedule C on your personal tax return, then you get what's called self-employment tax, which I'm sure a lot of the listeners have gotten on their tax return, the self-employment tax. That is Social Security and Medicare for the self-employed. So you would pay it there if you were a small business owner, and that's the way you reported your income. So it just depends on how your income's reported or how you're paid.
Simple as that. Makes
Simple
sense.
as that.
If that was simple.
Yeah, and that is really if you're doing like a sole proprietorship or an LLC or something like that, then you're going to pay taxes and then Social Security on top of that. And if you are an S Corp or something like that, then you should be getting a paycheck and stuff will come out of it. So it's so when you're talking about how it's set up, that's what you mean, whether the LLC versus the S Corp. Very generally, yeah. Okay. Cool. We have another question from Brian, and also I can't remember how to say this name. Joao. I'm sorry, Pedro Riaz. Anyways, how much money do I need to take out of every wedding? Whatever, for to prepare for taxes. Is there a good like percentage estimate that you should be taking out, per every time you get paid, I guess?
So that's going to differ from just about every person, because regardless of whether you're an S Corp or whether you're a Schedule C or a sole proprietor or just a single member LLC, all of that income is going to be taxed at your personal income tax rate. And so if you're married or you have kids, or depending on the income level of your particular business, and a lot of other factors that go into taxes, it would differ across the board. And then it's also going to differ what states you're in. If you're in Texas or Florida, you don't pay any income tax. If you're here in Oklahoma, you pay about 5%. So you want to add that to it. So it's not necessarily, it would be looking at what your particular tax rate was. And then if you wanted to set that aside and put it into a bank account for taxes later, then that's probably like coming up with what your personal tax rate is and going off of that. But again, that's kind of having somebody do your books and then looking at that throughout the year. You're not going to get surprised, so you don't necessarily need to be sticking money away, or if sticking money away, we're going to have a better idea of what your actual tax rate is, because that's going to differ. This year might be different from next year if you end up making a lot more money. So there's not really a flat rate, but you could come up with a flat rate if whoever knew your tax situation had that.
And I think that's one thing so before meeting you, I kind of just guesstimated and pulled back like a quarter of everything I made, 25%, and put it in a tax savings account the whole year. And most of the times when I got to my taxes, like there was extra in there that I didn't need because it is so different and unique to each person and location. Like you're saying, oh, I have 2 children, I made this much, I live in this state, whatever. And so having someone like Jeremy be able to check in with every few months, he can really look at the actual numbers and say, hey, it looks like you're good. You've set back this many $1,000s. I wouldn't set back too much more based on this, or you need to you need to save back more. And why that's important, I think so, is because when we're running our small businesses, every single dollar really counts, and every dollar either can sit in a savings account or go do work for you and your business. If you saved back an extra $5,000 that you didn't need to save back, what could have you done with that money to make more money this year? Could have you bought the computer you needed, or could you have marketed, or could you? And so having someone, on your team to say, okay, hey, let's check in and see, you're good. You should be saving back 17%. You should be saving back, once you hit this number, let's meet again, or whatever it is. It's different for each situation. And that's why it's so difficult to run your own business and your own taxes, because the tax code is, thousands and thousands of pages long. It's not just like this is the right answer, this is the wrong answer. Everyone's scenario plays a different role in what they should be doing. And so having somebody that focuses their entire time on that tax code can literally save you not just the money that you would be saving back, but the opportunity cost that you could be costing yourself by saving too much money back. So,
well, I had a client that came to us. He was a sole proprietor. We ended up making S Corp election to save on taxes, which is another tax planning idea. Well, he just kept making his estimated what he used to pay in and whatnot. And then when we came to tax projections in, I think it was like August or September, he was expecting to keep paying so much money in because he didn't really believe me how much money he was going to be saving with the S Corp. And so he had all this money set aside to keep paying taxes. And when I came to him, did the tax projection, told him, hey, you've got enough already paid in. You don't even need to pay anything out for the rest of the year. He was super excited because he could have used that money doing advertising, and he wanted to, but he had it stuck aside because he was so scared of taxes that when I told him he wasn't going to owe a whole lot more and he was sitting just fine with the IRS, he was so excited because he was going to be able to take that money and get it to work for him and go do advertising and other stuff that he wanted to do. So
yeah, I mean, when you're running your small business, it's like every single dollar is so valuable. Like if you sit it in a jar, it's not going to do nearly as much for you as you maybe invest that into client gifts or into marketing materials. Or there's so many different things you can do with that money, or just the peace of mind knowing, oh, I could be actually paying myself $300 more a month. That would help with my bills or my rent or whatever, to just have less pressure on you. So,
or people get into credit card debt and they wait until to get their tax refund to go pay it off. Well, you've been paying 30% interest all year and you get a super refund. Well, you could have paid that credit card off throughout the whole year if you would have known you weren't super overpaid. So, So you're not, that money is not doing anything for you. And the government's definitely not giving you interest on the interest-free loan you're giving them. So
that's not
getting really overpaid is not necessarily the best idea.
Yeah. We in our chat here, we've gotten a few questions. Olga asks, she is an LLC partnership, and do our losses for the year get reported on our 1040 and reduce our personal taxes due? Is the first question. And the second one, what does pass-through entity mean? Okay, so we'll start with the first one. Or no, the second one. That's what I meant to say, the one you just said. Pass-through entity is basically a partnership, an S Corp. They're going to be business entities that are separate from the individuals, but all of the income is going to pass through to them personally. So a partnership, an S Corp, the company themselves don't pay income tax. So if the company makes $20,000, the company doesn't pay income tax on $20,000. That $20,000 flows through to you on a K1, which is just the form, just similar to like a W-2. It's just a form reporting that income that you report on your 1040 personal income tax. So that's what makes it pass through. And then the first question was,
You're an LLC. Tax is a partnership.
It's a LLC partnership. Do our losses for the year get reported on our 1040, and does that reduce our personal taxes?
It would get reported to. It would be reported on your personal tax return, and it would reduce your income as long as you had basis to take those losses. And we're not going to get into basis. That's just a super boring conversation. So you have to have basis in a company to be able to take losses, but most of the time people do, and sometimes they don't. But as long as you have basis, but those are, and even if you didn't have basis, they would carry over until you did have basis. So those losses aren't lost if you don't have basis. But yes, in general, you would take.
It is boring. Yes.
Yes. You would take those. You would take those losses against income and reduce it. Yes.
So tell me, what CRM do you use? If you're not sure or you don't know what a CRM is, I'm about to save you a lot of time and therefore money. CRM stands for Customer Relationship Management. Basically, a CRM is an online service that helps you better serve your clients. HoneyBook is both mine and John's CRM of choice. We absolutely love it. HoneyBook allows us to do all of our correspondence, contracts, and payments all in one place. One of the features that I love is the automated workflow. We all have emails that we send out to all of our clients, right? At 6 months, 3 months, 1 month, the week of. All of us do it. Automated workflows make it so that those emails can go out automatically. Since I don't have to take time to, 1, remember to send them out, and 2, to write them, I save time and make more money by working more efficiently. Are you interested in saving time on the business side of things? Go to howtofilmweddings.com/honeybook for a free 1-week trial. Also, because the Honeybooks really like me and John, we can give you $200 off of your first year, and that also comes with a 60-day money-back guarantee. So what are you waiting for? Go to howtofilmweddings.com/honeybook to start saving lots of time in your business. Oh yeah, legally I have to tell you that John and I are affiliates of HoneyBook.
Okay. I'm kidding. All right. I see a question from Henry Martins. I think this is an awesome question. He says, how do you feel about being a single member LLC with an S Corp election and 1099ing yourself 30% of your profits at the end of the year and taking the rest of the profits as a K-1 distribution to not pay self-employment taxes on the entire 100% of profits? This is such a geeky question, but I'm so excited for it. Do you want me to read it again?
And to be fair, Henry is located in Texas, so I don't know if that changes that answer.
No, it doesn't change. Self-employment tax is a federal thing, so it doesn't matter at the state level. So doing the 1099 to yourself at the end of the year for an S Corp is just wrong because you're not a contractor. You have to pay yourself as an S Corp shareholder. You have to pay yourself as an employee, so you have to pay yourself a wage. But say that you did it wrong. People do stuff wrong all the time. It's not uncommon. So if you did it that way, you still wouldn't be getting around self-employment tax, because that 1099 you would have to report on your personal tax return, and that 1099 is subject to self-employment tax. So you're basically achieving the same as paying yourself a $30,000 wage by paying yourself a 1099. Does that make so you're not getting around self-employment tax on the $30,000, but on the profits of the S Corp, you would be getting around self-employment tax, and that's the whole purpose of doing the S Corp election, is getting around as much self-employment tax as you possibly can.
Okay.
Henry, let us know if that answers the question for you.
Yeah, if there's a follow-up to that, I'd be happy to keep going with that. So.
Yep.
Yeah.
All right.
Tyler asked, they started using you guys earlier this year, and they signed up and switched to an S Corp. He has a partner. He says, we sometimes buy our gear through the business, but also buy things with our own personal money. Is it recommended to take less of a paycheck and have the company buy all of the gear?
Well, the company should be buying all of the gear. So as far as the salaries go in an S Corp, I don't think you should be reducing them for equipment purposes, because I mean the IRS for the S Corp election for the salary say it has to be reasonable, and reasonable is in air quotes because there's not really a definition, but it should be a wage that is what you would pay somebody to do that same job. So the equipment being separate, I think meshing those two is probably the best idea. The company should be buying all the equipment. I mean, you can still, if you have to do it personally, you can always, use personal funds and just make sure that that's more reported.
Okay.
Mm-hmm. But if you were recommending it, you would keep it. I mean, from everything that I've done is trying to keep personal funds away from spending. Sometimes you get in a pinch where it's like you paid yourself and then it's like you need to do something, so then you need to pay for, the business thing with your personal account or whatever, and that makes it messy. But always just keeping notes of those things, so when you do file your taxes, you can.
Yeah, because it's more of a if you have one business account running all the business stuff, as long as you reconcile that bank account, everything's accounted for. If you've got money outside of that, whether it's cash or personal funds, it's going to be a matter of you making sure that you track down. So it's more of just a matter of potentially missing deductions that you should be entitled to, and nobody wants that.
No,
we love deductions.
Yeah.
Yes. Good question, Tyler. Before jumping to the next one, if you're just getting onto this live with us, we are talking live with Jeremy Doorn. He is our tax guy, books guy, business guy when it comes to keeping ourselves legal, making sure that we have all of our ducks in a row with our business and our books and reconciling everything. He's here answering your questions. No question is dumb, at least we don't think. So ask your questions below. He is Nick and we both use him. They're sponsors of our podcast, howtofilmweddings.com/core, if you want more information or just to kind of ask a few preliminary questions.
Mm-hmm.
All right. So yes, Nick.
Yeah. Let me. This is one we got from our question that we posted yesterday. VJ asks, what are the income limits for contributing to Roth IRAs and regular IRAs?
So, well, if I understand this, the income
said income limits.
Income limits. So, traditional IRA, that would be pre-tax, and you can contribute $6,000, and you can contribute an extra $1,000 if you're over 50. I don't think there's income limits. There's some income limits if you have a retirement account like a 401k with another with an employer or something, so there might be some limits there. And then the Roth IRA, again, it's $6,000 you can contribute, and then you're not able to contribute. I have my handy little book here. Hold on, because there is income limits. So if you're single, the income limits start. You can't contribute to a Roth after you make. Well, it gets limited. It starts getting limited to at $122,000, and then gets completely phased out at $137,000. That's for single or head of household. Married filing joint would be $193,000 to $203,000. So you can't contribute to a Roth after you make that much money.
I make a face at that.
Yeah, and you can make a face at that.
Because it sucks.
But you can,
backdoor it. I know.
Well, you can backdoor it. You can also set up 401ks and have a Roth 401k within the 401k, and those limits end up being $19,000 you can contribute to them, and there's no income level phase out like that. So this
is why I have a Jeremy in my corner. This is why you have a Jeremy in your corner. That's a good question.
That is a good question.
What do you got,
I ask
John?
one, Nick?
Yes, I want you to.
Let's see here. I had one that was really, really good. Okay, so Scott says, I'm literally just starting out as someone who will only do a handful of weddings in a year. Apart from a separate full-time job, where do I start with being a business? Sole proprietor, LLC, neither? What is your advice there, Jeremy?
Yeah, I usually tell people, setting up an LLC is always a good idea just from a legal standpoint. Note, I'm not a lawyer, so I can't give you legal advice, but, setting up a business separate from yourself, make it in a limited liability company, registering with the state that you're in. That will enable you to get yourself a business bank account, then get the business bank account, run everything through the business. That's going to you're going to default to yourself. So you're going to start reporting on a tax basis. You're going to be a sole proprietor, Schedule C. And I would start there, and then then if you got somebody monitoring it, then you can start looking at when a good time to make an S Corp election is from there. But I think starting out LLC is, here in Oklahoma, every state's different. I don't know all the different registering as far as states go, but Oklahoma, it's like $100 to register an LLC. So just go get the $100.
I have a follow-up. Yeah. So if Scott is just getting going, is Core somebody that he should reach out to, or should he try to do that through what should he be thinking about, finding somebody local that could just help him get it going, or do it online, or what do you recommend for, is this too early to have someone like you all help him?
No, not necessarily. I mean, it depends on how fast and how big he wants to grow. I think having us from the beginning is not necessarily a bad idea, unless you're just going to keep it something super simple and super to the side. But we can help people get LLCs. I can in Oklahoma. I don't. Like I said, I don't know about getting them in other states. But if it's just yourself, getting an LLC with any state is typically fairly an easy thing to do. So the only time that I would say, if you had two people that were forming a partnership, how to film weddings, and you had an LLC, then it's always a good idea to go get an operating agreement, everything else with an actual attorney that draws up the different terms and stuff. But if you're just by yourself, getting an LLC doing it by yourself is probably not the worst thing that you could do.
Cool.
And if someone is just starting out, what are the advantages of going ahead and filing for an LLC?
Again, those are going to be more legal advantages, so I don't know all of it, but it's more about separating yourself. From a tax perspective, it doesn't mean a whole lot.
Okay.
Yeah.
All good things. Yep. Yeah. Henry said that's a good answer to the question. So that's cool. Silvana says, we are LLC doing business as S Corp. Travel write-offs, how does it work? What if, as a videographer, you travel and while you're on vacation or getaway, you're filming and creating content for yourself to keep active on your social media too? Does it count as part of a write-off, or only when you travel for a paying job?
No, I mean, if you're, I think there's a lot of gray that she talks about there. A lot of times people if you're traveling to go film a wedding, most of whatever you're traveling there for is going to be travel expense as a business expense. There's different situations I think that you can get into where you bring the family with you, and as long as a good portion of it is spent doing work, then I don't think there's much of a problem writing most of it off as travel. But if you're just going on vacation and you happen to be checking Facebook or doing some of that, some of that might be a little questionable as far as travel expenses. If your main purpose is going there is for vacation, then maybe leave the travel expenses out as far as business goes.
Yeah.
Agreed.
All right, Nick, what do you have?
Yeah. Okay, Ryan asked this question. Do I need QuickBooks, or can I use a CRM like 17 Hats to do everything I need to do everything for bookkeeping and taxes? Also, at what point do I need to start paying my second shooter as an employee versus a freelancer? Do I have to take taxes out of his check, or can I give him a W-2 at the end of the year? That was lots. Do I need to break that down?
Yeah, so we'll start with the, what was the first question?
Okay, the first one was, does he need to get QuickBooks for everything bookkeeping related and taxes?
So that depends. I don't know. I'm not super familiar with all of the CRMs out there. The most important part about doing your own books or just doing books in general is being able to reconcile a bank account. So if your CRM is doing the reconciliation of the bank account or can, then you probably don't need QuickBooks. But if you don't, if the CRM's not doing that and it's mostly just billing, then you're going to want to have a QuickBooks software to be able to do that reconciling for sure. Because the reconciling is the only way you make sure that you're capturing all of your expenses.
Okay. And then at what point does he need to start paying his second shooter as an employee versus a freelancer is the next one?
So you guys are more experts at this than I am, but between a freelancer, contract contract labor versus employee really comes down to control, right? So if you've got a contractor, you don't really control. They've got their own tools. They've got their own thing going on, right? And you're really contracting with them. Then whenever they become just an employee is the time. I mean, it's more about just paying correctly. It's not like they've been there 6 months. It's more of, well, I'm not really contracting with them. They're going to be my employee. They're going to only work for me. They don't do work for anybody else. So you guys know all of the different ins and outs of hiring contractors there. So maybe you guys can shift.
And I think it's different in every state. Like, you really have to be careful. There's a lot of new laws in California. I mean, the idea that I'm seeing obviously is that, like, the government wants to make it where the majority of people are employees, and the more they get, more out of that than they do just a contractor.
Because they get more benefits,
right? You're gonna need to look. From a guy that I went to church with that was an accountant, not a CPA, but an accountant, and this was a few years ago. He said what it really comes down to with subcontract labor versus employee is whenever you are dictating their time. Like saying, you have to do this from 9 to 5. Okay, now you're an employee. Where it's a little gray, for second shooters and stuff, is we have a timeline and we need them, but it's not as. So I guess what we're saying is that's kind of a personal thing, and how often you're using them and what you're using them for, and if you believe that you're falling in, those guidelines. It's definitely. Easier for you to have subcontract labor than have an employee, right?
Yeah. So it's really just about paying them correctly. If they really are a contractor, just keep paying them as a contractor. If they're an employee, then they just need to be paid as an employee.
Right. And George just said it's different state by state. If you're working a certain number of hours as a subcontractor in Virginia, then you have to treat them as an employee. So it is going to vary state by state and how you go about doing that. And then the last one is I think he's asking about taking taxes out of his check and giving him a W-2 at the end of the year. That's an employee thing, not a 1099 subcontractor, correct?
That's exactly correct. Yes. If you pay them a W-2, if you pay them as an employee, then you have to be taking taxes out. You've got Social Security and Medicare and the company match and everything else, and unemployment that you end up paying federal and state unemployment. So
there's lots of stuff.
Yeah, lots of stuff. Yes.
Lots of stuff.
All right. I see a question here in the chat from Zach. He says his wife and I own an LLC in West Virginia. We include sales tax in our prices. We filed our state and federal taxes. Everything is fine, but I also just received a CST 200 CU, which is sales and use tax form. It seems like a form for businesses that sell goods and not services. I feel like we already paid taxes on that. But do I need to fill that form out as well and send it in? We are brand new to owning a business and doing taxes. So hopefully that made sense.
Yeah, I'm not super familiar with West Virginia sales tax or how that works. So I think it would be a matter of looking that up. I honestly would be doing you a disservice to try to even answer that question, but it would definitely need some research. If they're sending you something, it may or may not be correct. Yeah. We find that with the Iras and other taxing agencies. They're not always correct, so it's always nice to have somebody that's there that will go look the stuff up for you, because just because somebody sends you a letter that says you owe this money doesn't mean you need to go pay it, because they could be wrong.
Mm-hmm.
So
okay.
Yep.
Okay.
Yep.
Matthew Reed said this is his first time filing taxes as an LLC. So how do he handle taxes if he has an LLC, another full-time job, and a spouse?
So if it's just a single member LLC, then he's going to report that income on Schedule E on his personal tax return, along with the W-2 and whatever earnings that his wife would have. So it would be all on a joint return. Yeah.
Okay. All on a joint
That is
return.
neat.
Yep. What do you got?
I can steal some. Rachel has a question. Let's see here. She says, I started taking clients in 2018. How do I count my business as a loss for buying equipment? Once I get my GE or LLC, do I state I started in 2018 or 2020? Does that make sense?
Well, so she started taking clients in 2018.
Yes. How do I count my business as a loss for buying the equipment? I think she's saying she got her LLC in 2020, but she's bought all this equipment before. How can she go back and claim losses?
Retroactively claim it, I think.
No, she's going to have to. Yeah, you'll have to claim it whenever you purchase it. So that's another planning thing of, well, should I buy it this year? Should I buy it next year? Or what can I do to minimize my taxes? Because really, if you made a whole bunch of money in 2019 and you had equipment to buy, but you waited till 2020 to buy it, you're not going to get that 2020 equipment write-off until 2020. So maybe you should have pushed it back in 2019 to write it off against some of that income, because everything on the tax return is reported on a cash basis. So, that's when you purchased it and when you received income. So, yeah, you can't retroactively do that.
Okay.
Do you remember that wedding from a month ago? Yeah, like that one that you needed to start editing yesterday? But you also need to prep today for your wedding tomorrow, and you're leaving for your first vacation in forever on Monday. So what do? It seems that the only creative part of your edits are the excuses you're going to have to give your clients. We have the solution, Wedditor. Wedditor is a team of top wedding editors, project managers, and account coordinators that help us wedding filmmakers edit. They match the right editors with your style so you can spend your time where it matters most, on your business. Nick and I both use Wedditor, and we don't know how we would run our companies without them. It takes a team to build an amazing business, and you shouldn't try to do it all on your own. Head over to howtofilmweddings.com/Wedditor to help you free up your time so that you can focus on growing your brand. Be sure to use promo code HTFW for $50 off your first project. Wedditor, more than freelance, more than outsourcing. We know the time suck that is searching for the perfect song for your wedding film. MusicBed has spent years collaborating with artists, bands, and composers to make it easier than ever for anyone to find the right song for their video.
With amazing artists like Chapters, Tony Anderson, and The Light the Heat, MusicBed is the best place for wedding videographers to get licensed music.
Their subscription service was a life changer for me, especially since all of their subscription music is pre-cleared for every social media platform: Facebook, Instagram, Love Stories TV, and my personal favorite, YouTube, all pre-cleared.
And if you are interested in a free month of a MusicBed wedding subscription, head over to howtofilmweddings.com/musicbed. When you sign up, use the promo code HTFW and you will get your first month for free.
Carrie, let me ask this one. Carrie Ann asked this question. She said, possibly the dumbest question of all time. There are no dumb questions. What are the taxes we need to be paying if we own an LLC? Do we just need to report all profit in our personal tax refund? What other taxes should we be paying?
It depends on exactly what business you're in, but there's sales tax if you're actually selling goods. Some states I think tax services too, so it depends on what state you're in. But you'll have sales tax, state income tax if you live in a state has income tax, federal income tax, and then you've got Social Security, Medicare, or self-employment tax. So that should be all of the taxes, unless there's there might be some different state specific taxes on, here in Oklahoma, if you're a C Corp or just a corporation in general, there's franchise tax. So, but as an LLC, you're not subject to it here. Some states that I've seen, they have like LLC fees that you have to pay every year. Here in Oklahoma, it's $25 a year annual fee. So not necessarily a tax, but a fee to do with just having that LLC.
Yeah, I think I have to pay. It only costs me in Kansas like $50 to set up my LLC, but I have to pay $50 every year to keep
it up.
Registered.
So, nice.
Yeah, registered.
In Texas, it's like hundreds of dollars because they don't have state income tax, so they've got to make their money somehow. So they just charge a bunch of fees to set up businesses. They even charge can't remember, to close a business, it was like $400 or something ridiculous.
That's funny.
There you have it.
Yeah. John,
I have a question from Katie. She says, I have to pay a small penalty this year for not paying quarterly estimates. It's only $22, but I didn't know that was something I was supposed to be doing. Any clarification on this would be great, with a thumbs up.
What did you cut out there? It said, what did you say? Any clarification? Is that what you said?
Any clarification? Yes. Yeah, it's saying my internet connection is unstable all of a sudden. Yay for internet. It's only $22, but she's wanting clarification on what to do about quarterly estimates.
Yeah, so the quarterly estimates are, and like she said, the penalties are not large, but $22, if that income goes up even more, it could become a couple $100, and who doesn't like to save money? Nobody likes to give the government more than they need to, right? So, some people do, but yeah, so if you owe more than $1,000, then that next tax year, you're going to be required to do estimated tax payments, which they're quarterly, but they're on the IRS's quarter, which is just random dates for the IRS. So it's April 15th, June 15th, September 15th, and then January 15th in the next year. And this goes back to planning. So if you knew that your business was making money and you weren't going to end up paying enough in, and you should have been paying quarterly estimated taxes, you could have saved that $22 by just doing some simple planning with Core or with any accountant for that matter. So yes, very important.
Okay. Here's one. Mark asked this question. The great debate, profit first or GAAP, I don't know what that stands for. Which method to run your books?
Definitely not GAAP. That's like an accounting. That's if you had what do they call it? Like audited financials. Like some companies have to have audited financials, like full blown audits, where they go and verify all of your receipts and your income and everything else. You don't need that. And if he's referring to profit first from the book that Mike Malkowitz wrote, then profit first for sure. Unless you have a company that has to be audited, but I assume that most of the listeners don't have company financials that have to be audited by a CPA firm and spend $10,000 to go get it audited. No.
Okay.
There you have it. All right, Eduardo asked a question. I think this is a good one. What are some of the most overlooked deductions you have seen small businesses not take advantage of?
Yeah, from just looking at people like we had talked about earlier, people that have like a business account, but they're also running stuff through their personal. I think a lot of times people forget they're using their cell phones, and for years they've just been paying that on auto draft out of their personal account and never got it switched maybe to their business account. Because if you're using your cell phone for more than 50% in your business, then deducting that whole cost is there for you, and so sometimes that gets forgotten. Sometimes business mileage is another big one.
I didn't do mileage for like my first 4 years of business because I didn't know it was a thing, really.
Yeah, and so we have like questionnaires and stuff that we have people do as we're doing their tax returns so that we kind of catch some of these. Here in Oklahoma, we have an Indian employment credit. So if you have employees that are Native American or enrolled Native Americans, then there's big tax credits for those, and I think those get overlooked a lot. So some of the specific state tax credits get overlooked a lot. I mean, there's just lists and lists of tax credits that people probably don't know about. And they don't typically apply to everybody, but they're there. What other deductions? Home office deductions. Sometimes people that are working out of their home, they don't have a home office deduction on there. We try to capture that when they're, sole proprietors. I think that's most of them.
Okay, that's good. Good. Scott asked another question. This is, John, kind of more for me and you, but he said, when starting out, at what point did you become an LLC? Does it make sense to legitimize before I even have content? I will say this, Scott, my dad is an attorney. And whenever my wife and I started a business, when we were just talking about it, he went ahead and got all our LLC paperwork up and set up and ready to go. And I asked him this, and again, this might be state by state or, whatever. He is a lawyer, but I'm not saying what he said. He said, the biggest reason that I did that was in case you get sued, if you're an LLC, they can take your assets from your LLC and not like your house. If you're a sole proprietor and everything, you're funneling your business as a sole proprietor and you get sued, you could potentially lose your car, lose your house because your creditors might come after you. If you're an LLC, they can only take the assets that the business owns. So from day one, we were an LLC.
Yeah, I think I did some side work during the middle part of my first year. And then when I decided, like at the beginning of the next year, I just went to my accountant and the attorney and got everything set up through the state. And I started as an S Corp. I have no idea why. I just was like, my brother was an MBA and I was like, what should I get? And he's like, I get an S Corp. It's like, okay, that's what I'll get. This was 2007. Give me a break. But yeah, so it's really inexpensive and it will save cover your butt just in case. Like if you're doing a small gig for free and your tripod falls over and knocks a candle and causes a fire at the reception, and it's like they can sue you because you were, whatever, but they can only sue your LLC and not take everything you own if you have just a little bit of protection. So it's kind of like just getting a coat for the winter, just nice to have. So, and it's not too expensive. So anyway, I made Jeremy giggle.
Yeah, we're running close on time, I think, but we have a couple more questions. One of them was Jordan, and he says, I think it's a he. I can't see the picture. Follow up. At what time should we transfer into an S Corp and take advantage of more of the tax benefits? So let's say Jordan is currently an LLC. At what time should he transfer into an S Corp?
Yes, so that's a really great question, and that is where tax planning and the financials and knowing what's going on in your business really comes into play. So I've always said, and everybody's situation is going to be different, but I think $50,000. Once you have net profit of $50,000 in your business, it probably makes sense to make an S Corp election because, like we talked about before, you're just saving on self-employment tax, right? And so you have to pay yourself a wage, which means you have to have payroll, which means you should hire a payroll company. Some people like to do payroll on their own. Don't do it. It's not a good idea. It will cost you money. And you can have somebody do your payroll for $100 a month. So there's additional costs that come into having an S Corp. You have another tax return. You got payroll. So until you overcome those, as far as saving enough in self-employment tax, it's not doing you any good to get an S Corp. So if you're only making $20,000 or $15,000 right now, it might not make sense because a reasonable wage for you might be $15,000. Well, now you've just paid the whole thing and it's subject to self-employment tax. So it's not really saving you any money. It's actually going to cost you money because you've got to have a separate tax return for the S Corp and you've got to have payroll. So it's going to cost you another $3,000 just to have that S Corp. So that doesn't make a whole lot of sense. So that's why I've found that, $50,000, once you have that in net income, then it's probably a good time to start looking. When you get to 40 or 50, 60, start looking at making that and looking at the actual numbers and making that.
And just to clarify, he's saying net income, net, not just, after expenses. If you're like, wow, I'm going to be paying myself, or I have $50,000 of profit, that is a good time. Somewhere in that range, if you're at 47,000, 42, just, you might, Someone
You
know.
might have the conversation. If you're at 45 this year, you might have that conversation for next year, and just kind of start crunching the numbers. So
Yeah, I know whenever I signed up to work with you guys, that was a conversation that we had like at the very beginning, because this was towards the beginning of 2019, and you were like, you're kind of right, Nick, you're kind of right on that bubble of being S Corp or LLC, and we stayed with LLC, and now we've elected S Corp, and then you told me, oh, if we would have done S Corp earlier in the year, if we could have saved you on taxes. But we knew that was a thing, so that wasn't, but yeah, definitely.
Vince made the S Corp election, and we're going to save a bunch of money this year.
There we go. That's what I like to hear. Matthew asked this question. He doesn't have a bookkeeper. How can he track and know all of the deductions that he should be making in his business? Is there like some rule or some guideline that he can kind of follow for that stuff?
Yeah. So the IRS deems deductions or expenses as ordinary and necessary to business. So, and a good way of tracking that stuff is, you can setting yourself up with a QuickBooks Online account, and you can have it, attached to the bank account where all the transactions flow in, and you can kind of do that bookkeeping yourself. And so if you've only got a few transactions, that can be kind of a simple way of doing it. Yeah, that's what I would recommend.
Yeah, that's what I did when it was a little smaller. It was like I had a QuickBooks account, I connected it to my bank, and then I would go in every month or two and like make sure all the, it'll notice, this bill is this thing, and it'll ask you again if that's the same kind of charge. You can file it into certain categories, and then you can take that information to an accountant, which is fine. But what I realized, if I would have been bringing somebody on to help me quarterly or monthly or something, I would have found way more deductions and way more, I would have saved more money than not. So pretty early on, depending on the size of your business, especially like with Core or other companies, they will work with you depending on your size of business to tell you, oh, you only need to come in once a quarter, or only need to do, small reconciliation of your books. But I would say, as soon as you feel like you're actually going to be doing this thing full time, it's worth really heavily looking into somebody, doing that kind of stuff for you. So
full time, your time is better spent filming weddings or going and getting clients, not sitting in front of QuickBooks trying to code stuff, right?
Right. Exactly. So, it's the same thing, it's like somebody could hire a college student with a camera to film their wedding, but we wouldn't recommend that. It's fine, but your final product might be different if you brought somebody on that really knows, it spends their time doing that thing.
Yeah. Yeah. So we are coming up on time here. We wanted to spend an hour-ish, just talking with Jeremy. So first off, we want to thank you so much for taking time out of your busy season, your busy time to share your knowledge with our community. So we really appreciate you taking the time.
Thanks for having me, guys. This was a lot of fun. As fun as talking about taxes can be.
Oh yeah, yeah. So, anyways, if you would like to take advantage of Core and their services, all you need to do is head over to howtofilmweddings.com/core. There you can get in touch with Jeremy and his team and talk to them about doing your bookkeeping, doing your taxes, figuring out if that S Corp election is something that you need to do in your business. They can reach and help anyone in the U.S. So this is going to be U.S. only people, but if you're not located in the United States, we highly recommend you find someone that can do small business books, small business taxes to help you in your business. If you're watching this on YouTube, subscribe to our channel. This is going to be for the podcast later, so if you're watching live, sorry about that. Whatever.
Laying in the plane.
Yeah, laying in the plane. It's always fun, and if you're listening to this on a podcatcher, rate and review us. And until next time, we'll see you.
See ya.